Guys, a lot of people are watching these silver stacking YouTube channels and are convinced that investing in silver is easy and a no brainer investment. I'm going to look at how silver has performed over the years and also show how people are making big mistakes in investing in silver. I'll show you how you can invest in silver without losing a large percentage of your money the moment you buy it. And I also want to point out some myths that are floating around the silver stacking community. If you're considering buying silver or even gold, watch this video first because you may save a lot of money or even change your mind about even buying silver. Now, silver buyers fall into three categories, in my opinion. You have the hobbyist, the investor, and the person buying silver as an insurance policy of the dollar crashing and having a Mad Max kind of scenario. That's the prepper type person. The hobbyist coin collector is interested in rare dates and the condition of coins and buys graded coins for way over the silver content value. This video is not for those people. This video is for the other two types of silver buyers. The investors who want to buy silver because they believe it is underpriced and they will sell it later for a higher price, just like they do with other investments like stocks or real estate. And the other type of person is the one buying for the dollar crash scenario. Now let's talk about the myths that a lot of silver stackers, or more likely the dealers that are selling precious metals, throw around to kind of scare people to buy at any price. So the first myth is that silver is a great investment. Let's take a quick look at how good of an investment silver is versus gold and stocks over a long period of time. So looking at this long-term silver chart, you see that silver fell as low as about 30 cents an ounce after the crash of 1929, starting the Great Depression. And in 1934, right before the Silver Purchase Act, it was about 50 cents an ounce. And of course, gold was $20 an ounce before the 1933 gold confiscation. If we look at this inflation calculator website called in 2013 dollars, if we use the price of silver in 1933 when they confiscated the gold, so all things being equal, about 50 cents, the price of silver an ounce, all the way to 2023, the inflation adjusted price of that 50 cents would be about $11.83 today, or about half the price of what silver is currently at, around $25. So you are up 50 times the nominal price, meaning the price you paid in 1933 till today, you'd be up about 50 times. But if you accounted for inflation, you'd be up only about 2 times what that inflation amount is today. So looking at gold back from 1933, when it was $20, now it's worth $2,000. So you are up 100 times your money nominally, but that $20 from back then has the inflation adjusted equivalent price of $473. Now, here is the big problem with gold and silver. If instead of buying $20 worth of gold, you bought $20 worth of the S&P 500 index, instead of having $2,000 today nominal, you would have $308,000 today. Adjusting for inflation, that $20, instead of having $473 equivalent purchasing power today, you have $13,000. And so this is the problem with gold and silver. They don't compete with so-called funny money or paper money that is invested in stocks that go up, that are not anchored to something physical, so to speak, right? So you can have a $2,000 1 ounce gold coin today, or you can have $308,000 worth of stocks that could buy you a whole lot of gold or silver today, or basically 150 times more than if you had just bought the gold. So the people that are trying to tell you that gold and silver is a great investment are not really telling the truth if we're honest with ourselves. Now, I know some people are going to say I'm a shill for JP Morgan or Comex or whatever. Before you say that, let me just tell you that I've been interested in silver since about 1982. And I actually started investing in silver probably around 2005 or so. And I am still holding that silver from back then. And let me tell you, it's been a horrible investment. That's just the truth of it. Gold is a little bit better. It's only about 5% off of its all-time high, but silver is 50% off of its all-time high from 2011 and even 1980. So on to the second myth, and that there is a silver shortage out there and JP Morgan is shorting silver and it's going to explode in their face and silver is going to go to $200 because there's not enough silver out there. That is not true. There is a lot of silver out there. Now, JP Morgan may be shorting or whatever they're doing, but all of these articles you see by people that saying that the silver price is going to explode, it's right around the corner, COMEX is blah, 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 empty and this and that. They have been saying that for at least 15 years or more because I have been reading those articles since at least that long. And they have been wrong all of this time. But in the time that they're saying silver is going to explode in price, they're happy to sell it to you all along the way. So what does that tell you? And the other myth that I don't like that these dealers try to tell you is that if your silver is down, basically you bought it at one price and you could only sell it for a lot lower, either because the price of silver went down or because you paid such a high premium that the moment you bought it, it's already worth 20, 30, 40, 50% less. They say it's only a paper loss. You don't realize that loss until you sell it. That is a damn lie. Saying that is basically just a cope to not wanting to realize you've taken a loss. Your investment is only worth what you can sell it for today. It doesn't matter what it's going to do later on. It may go up, it may not. If you ever bought a stock on margin and it falls 30% and you get a call from your broker, a margin call saying you have to put up more money because the stock dropped, did you ever try telling them, don't worry, it's only a paper loss. It's eventually going to go back up. They'll laugh at you and sell your stock immediately. Now, I know you're saying that's different because you're holding something physical. Yes, that's true, but that physical is only worth what you can sell it for today. And so the last myth that you always hear is that basically precious metal owners will inherit the earth when the dollar crashes and we go to Mad Max type scenario. And kind of the Bitcoiners believe this same kind of thing. So basically the idea is people who stack precious metals and prepped away their food as well will be the new Bill Gates and Warren Buffett when things turn to crap. Bill Gates and Warren Buffett will be on the street begging for food while you'll take your 1 ounce of silver and buy a Rolls Royce and a mansion, and you're going to be living good, cooking your food while all the poor people just sit and smell you barbecuing in the backyard while they starve to death. That is definitely not going to happen. And I'll tell you why. It's not going to happen because the government changed the rules as they go along to suit them and to kind of keep them in power. And if you watch my video on the Germany hyperinflation in the 1920s, you'll see that the government did just that. They changed the rules to make it illegal to hold silver or gold or even foreign currency to the point where they would raid restaurants and check all the patrons' wallets to see if they had any foreign currency, and they would confiscate it. And they even changed the laws so that they can go into your house and confiscate and look for gold and silver. And so don't think the government will not do something like that if they deem that they need your gold or silver. And as having a bunch of food while everybody else is starving, well, that's kind of obvious. If a bunch of people are starving, they're not just going to sit around and watch while you eat steaks. They're going to come and try to take what you have, same as it's always been. Now, am I saying there's nothing you can do and so don't bother buying precious metals or food or supplies or anything like that? No, of course not, but do it within reason. And before you do any of that, look at the amount of debt you hold. If you're holding credit card debt and paying 20% interest, pay that down first, because that is like paying yourself 20% interest a year on your own money. Then you can go stock up on some kind of supplies and food, but don't bother buying 5 years worth of food supplies, because if everybody is starving, you really won't last that long, because they will raid your house before you even get to week number 4. And so after you do all those things, if you still have money and you want to buy some silver and gold, go ahead, but do it smartly so that you're not paying huge premiums. So if you still want to buy silver, how can you do it the most cost-effective way? Think of silver like buying any other commodity. It's like buying rice. The bigger the bag, the cheaper per pound it costs. So if you buy rice in a small package with a fancy box on Amazon or something like that, you're paying a lot more per pound for that rice. So never mind the fancy design or weird shape special edition silver. It's only how much silver am I getting per dollar. That is the only thing you should focus on, because the reality is that when it is time to sell, you will most likely only get the current silver price, no matter how much you paid over the silver price for your American Eagles or any other fancy coin. And if you watch my videos where I try to sell silver at coin shops all over the world, in Europe, in Egypt, and even in New York City, you'll see that not only did I not get any premium for my coins, but they even offered me under spot price. So in a Mad Max situation, it may be even worse than that. You may be trading a 1-ounce silver coin for a dozen eggs or something like that. Now, if you still don't believe me and you're thinking that you should buy American Silver Eagles or something like that because they come from the US Mint and they'll always be worth more, do this before you buy a whole bunch of them. Go out and buy a few of these coins or bars that you thought would be a good investment, and then immediately try to sell them at another coin shop or even the same place you bought them from. You might be shocked to realize that you are losing 20%, 30% or more from the price you paid, even if the price of silver did not change. It's better to realize this now than to buy all of these high premium coins and realize it some years later when you need to sell and do not get what you thought you would. There is already enough risk in the price of silver going up and down or just not going any place. That's why you should only buy as close to the spot price as possible by only buying things that have the absolute lowest premiums. So let's take a look at how much you should pay over spot for silver and gold. So I'm going to look at APMEX and SD Bullion, and looking at 1-ounce American Silver Eagles, which is popular with most people who think they're investing in silver. The price, they're having a sale today, $31.90 any quantity. Usually it costs more if you buy 20 or less, but $31.90, the price is currently $24.91. That is a premium of 28%. That is not an investment when you buy something and it's worth 28% lower the second you buy it. Now, I know people are saying, oh, the dealers will give you more than the spot price. Okay, they might give you $1 or $2 more. It's still losing like 20% or better. And a year ago, the premiums were like $15 to $20 over the spot price. The spot price was the same. Silver was like $25 a year ago, but these were selling for $40 to $45, which is a 60 to 80% premium over the spot price, which means if you bought a year ago, you are down 80% or so, 60, 80%, depending on what you paid. SD Bullion is even a little bit more expensive, $32.87. So this is over a 30% premium. If you bought Microsoft stock and the second you bought it, it was worth 30% less, would you buy a lot of Microsoft stock? Would you consider that a good investment, that it had to go up more than 30% just to break even? Okay, so you don't want to pay 30% premium on your silver. What should you buy? Well, you can buy 1-ounce silver bars, which are about $28 or about $3 over the spot price, which is about a 12% premium. The cheapest one at APMEX are $27.40, which is about 10% over premium, which is a lot better than 30%. But this is the cheapest. What's the most expensive 1 ounce bars they have? Well, you could spend as much as $110 buying this John C. Matthey 1 ounce silver bar, or this Engelhard for $69, or this PAMP for $42. Why would you buy that when it's the same exact 1 ounce worth of silver as this $27 Coca-Cola 1 ounce bar? Well, if you can get a 1 ounce for 10% over spot, can you do better by buying more quantity? Yes, of course. Take a look at these 10 ounce bars. All right, these are about 10% over spot versus their 1 ounce bars were 12% over spot. At Atmex, they have these 10 ounce bars for about $1 over spot, which is like 4%. Now, today is Cyber Monday, so they're having all kinds of sales. So this is not normal, but it is still cheaper than buying 1 ounce bars, or definitely cheaper than buying Eagles. So in normal times, this is more like a 10% premium probably. And again, you can buy these bars for 4% over premium, or get the same exact 10 ounces of silver for as high as $374 or $368 just because it's John C. Matthey or Engelhard or whatever. And by the way, if you look at Vermilion Enterprises on YouTube, the coin dealer in Florida, where he posts his prices for stuff, he sells Engelhard bars basically like $1 over spot. So when people come in and sell them, he buys them at spot and sells them a little bit over. So this fancy bar is not going to mean anything when it's time to go and sell this. And if you could afford it, I recommend, if you're going to buy, try to buy 100-ounce bars, because usually the premium is the lowest. And looking at Atmex, they also have them for $25.89. Any quantity, that's about 4% over spot. SD Bullion has them for $26.74. That's about $1.50 over spot, or about 6% over spot. Again, you could get 100 ounces of silver for $25.89, or you can get 100 ounces of silver for $31.39 with a Geiger bar that has the same exact 100 ounces of the same exact metal. And the same goes for gold. You can buy American Gold Eagles for $21.54, which is about 7% over spot. Or you can buy much smaller amounts like the 1/10 American Eagle for $253, which equates to $2,530 an ounce, or 25% over spot, which you will lose that as soon as you try to sell that, because you will only get close to spot or maybe a little bit above that. So what should you buy instead? Canadian Maple Leafs are also 1 ounce of gold for $2,107, or about a 5% premium. South African Krugerrands are only $2,067, or about a 3.5% premium. So that's half the premium that you pay buying a 1 ounce gold American Eagle. And in this case, the 1 ounce gold bars are just a little bit more than the Krugerrands, in this case, $20.82. So it's a no-brainer to buy the Krugerrands over the gold bars, because they're more recognized and harder to counterfeit than gold bars are. So if you are buying gold or silver, there are really only a few products that you should be looking at buying, and always look at how much dollars per ounce are you paying for that product. And if you do that, you will see that buying less than 1 ounce of any of these products is very expensive, especially with the gold. You can buy 5-gram bars for like almost $400, which is like $2,400 an ounce, which is like a 20% premium. Why pay that when you could buy Krugerrands for a 3.5% premium? Now, I see some people say, well, I do kind of a dollar cost averaging. I buy 1 or 2 silver coins a week, and so I just buy Eagles or something like that. Don't do that. Silver's not going anyplace. Save up till you have enough money to buy it in at least 10-ounce bars, or at least 1 ounce of gold. Or if you want a dollar cost average every week because you want to put the money away, go and buy a silver or gold ETF like SLV or GLD or the Sprott PSLV silver ETF. Put your money in that. And I know you're going to say, well, if you don't hold it, you don't own it. It's not physical, blah, blah, blah. You can put your money in that till you have enough to buy a larger quantity of some physical silver or gold. Or just put your money in a T-bill getting 5% as you save up enough money to buy one of the larger quantities of silver and gold. So guys, don't get caught up in the hype of the silver stacking and the unboxing of some new unique coin design or some new poured silver or this or that. Don't confuse investing and try to make more on your money and keeping up with inflation with a hobby of collecting shiny things that you like to look at. They are two different things. So I hope you guys got a nice unsugar-coated view of what gold and silver really are, how they perform against stocks, and if you still want to buy them, what you should be focusing on so that you get the most for your money and lose the minimum amount of money when you go to sell them. Thanks for watching, guys.